President Biden meeting this afternoon with CEOs to get an update on economic conditions in America following today's negative GDP print. Marriott CEO Tony Capuano was in that meeting, and he joins us now. Tony, it's great to see you again.
Hi,
Tell
Sarah.
us what did you learn from the conversation with the president?
Well, I think we learned a lot. I think we learned his level of engagement with business leaders across sectors, and he and the administration's genuine interest on what we're seeing, both the good and the bad of recovery. We were lucky enough to have both the Commerce Secretary and the Treasury Secretary in the meeting, and so we heard quite a bit, especially from Secretary Yellen, about the moderation in economic growth, but at the same time, the strength of the labor market and her view of the power of and sustainability of that growth in labor.
Well, we heard from the president and from the Treasury Secretary publicly, and the theme from the White House is we're not in recession just because we're seeing two negative quarters of GDP. Certainly, your industry is not in recession. It was the bright spot of the whole GDP report. You're double-digit growth in terms of American spending on leisure right now. Is that continuing?
It is. We've got earnings next week. The president asked a lot of questions about the pace of recovery, and we had great news to share with he and both secretaries. We continue to see strong forward bookings. We continue to see deep levels of pent-up demand, and we continue to see the sort of strong pricing power that you and I discussed when I was last together with you in New York.
But even if we're not in recession, and certainly not in parts of the economy like in services and like in leisure travel, Tony, we're shifting down on the economy, and this report makes a recession more likely to happen quicker. So what are your expectations for that consumer spending?
Well, again, as we talked about last time, you look at the confluence of inflationary environment, rising interest rates, rising fuel prices. It's not an unreasonable question to ask how it's impacting our business, but the summer has been a blockbuster. Our forward bookings into the fall look very strong. We see steady recovery in business travel. Group demand has been a real strong portion of the recovery, and leisure continues to be exceedingly strong.
Is inflation coming down in your sector at all? I was looking at December trips. It looks awfully high priced.
Well, again, we continue to see really strong pricing power, but obviously the other side of that coin is wage rate and other expense item inflation continues to challenge margins. So we're watching it closely on both the top and bottom line.
One of the best cases that we have for not being a recession is the labor market, which is strong, and it's something obviously the Treasury Secretary highlighted. How does it look from your vantage point, hiring right now?
So here in the U.S., pre-pandemic, we had a fairly steady run rate of at any one time about 6,000 vacant jobs. Today, we're plus or minus 8,000 jobs, but we've seen about a 40 or 50% uptick in application volume, which I think is quite encouraging for us.
That's good to hear. So expected to continue. Tony, there have been questions along the way about the administration's engagement with business. You're there for a CEO meeting. Is this the first time you're there? Is it the first time you're having these discussions with President Biden? Do you sense that there's a change happening here?
Well, it's my first time, but you'll recall my predecessor, Arne Sorensen, sat on President Obama's Export Council. And so I think as a company and as an industry, we remain heavily engaged with the administration, sharing our perspective on areas where they can help continue to grow travel and tourism. And I think a great example of that is all the leadership Secretary Raimondo showed on rolling back the requirement for inbound international testing. The U.S. Travel Association came out just last week and said they believe the impact of that change in policy will drive more than 5 million incremental new visits to the U.S. and over $9 billion of incremental spending. So I think the dialogue continues to be critically important.